Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, February 2nd at about 1 p.m. Eastern. Well, jobs numbers came out this morning showing that U.S. job growth accelerated in January and wages increased by the most in nearly 2 years, signs of persistent strength in the labor market that could make it difficult for the Federal Reserve to start cutting interest rates in May, as currently envisioned by the financial markets. Non-farm payrolls increased by 353,000 jobs last month. The closely watched employment report from the Labor Department's Bureau of Labor Statistics on today also showed the unemployment rate remaining at 3.7%. So on that news, let's go on and look at three charts that could give us some insight into the week to come. First of all, we're going to look, as we always do, at a daily chart of the S&P 500 SPDR, symbol SPY. Boy, we're having fun now. Of course, the SPY is the exchange-traded fund that closely follows our benchmark S&P 500 index. Well, right now, folks, the SPY is making a new all-time high at $494.10. It's just been a glorious uptrend since we had our October lows. Prices fell to October lows on higher interest rates, and the SPY made a low in October of $409.21. Then, as interest rates finally decided to melt a little lower, buyers came into the market, and with that, and with short covering as well, excuse me, the SPY bounced up off those 409 lows, moved up above the black line, the 200-day moving average, the red line, the 20-day moving average, which was inverted at the time with the 50-day moving average, the green line, and price started moving up very dramatically. It climbed up over, we had prior price resistance here at 438. The SPY popped over that, broke out of that, sitting on the 50-day moving average, and then jumped, then gapped up to the 446 level, quickly climbed through that, and then finally came in, closed its premium to the 20-day moving average, and started using the 20-day moving average, simple moving average, by the way, as a trend line. It continued to move higher up and over the trend line, then back up over the 20-day moving average, then back down again. It started to falter a little bit, but then we started earnings season right in here, and positive earnings results kept buyers buying to the highs we are touching now. It backed off at the beginning of this week a little bit. It was very overbought, as we can see the 14-day RSI. We talked about it quite a bit. It was staying right at that 70 level and then went above the 70 level, so we had to have a day down this past Wednesday. But now price is up again, and we're at all-time highs. At the moment, we can't argue with anything. The SPY is staying above the 20-day moving average. We're getting more and more earnings results out. Meta climbed dramatically today. Most of the momentum stocks are much, much higher. And not all, but most of them anyway. So we have to look at this and say, look up and say, thank you. We have no resistance to look at here because the SPY has never been this high before. So we can't say, oh, we had August highs or November highs. We can't say that because now we're in unknown territory. So we have to wait. And it will happen because price has to go down in order to go up. And so we did have this uptrend, higher lows, higher highs. We still have it. When and if it makes the next pivot, then we will be able to say, okay, now we have resistance. But until that time, we wait. So to remain bullish, we do want the SPY, though, to remain above the 50-day moving average. We do have support here down at 489, potential support. We have potential support at the 20-day moving average, now coming in at $481.48. We do have potential support here price support and moving average support, the 50-day coming in at 470, 471. So we've got a lot here of help. Things are looking positive at the moment. Never assume anything. Trade what you see, not what you think will happen. And on that news, let's go on to our next chart. As we usually do, our next chart is a daily chart of the Invesco QQQ, symbol QQQ. This exchange-traded fund represents the top 100 non-financial companies by market capitalization in the Nasdaq 100. And many of the much talked about Magnificent Seven companies, including companies like Meta, Nvidia, Amazon, and Microsoft, reside in the QQQs. Now, the Qs made an all-time closing high on January 29th, and we like to use closing highs because other highs, intraday highs, may be important, but the close is the most important time of the day. That is when traders, investors are making a decision to hold that stock overnight. So the close of the day is very, very important. So we did have an all-time closing high on January 29th at $428.13. At the moment, we are over that at $428.83. Of course, we do have about 3 hours left in the market today, but we're right back up at that all-time closing high. So again, when I captured this chart today, we're at $428.83 on the Qs. Again, we have nearby price resistance at just right at these levels, and certainly from that little consolidation from this past week and the one before. We have nearby price support at the 20-day moving average, which is coming in right where this pivot is. You can see this week price fell down almost to the 20-day, then started back up. So we've got price potential, I should say, price support at around 416-ish. Then we have the December highs back here at 413. That's a potential price support. And because we can see here that for quite some time, the QQQ has used the 20-day moving average more or less for price support. We know that since its October low down here at 342, we know it climbed above the 20-day and the 50-day moving averages and climbed over that October price resistance at 373. It climbed over that. It climbed over September price resistance, moving higher at 380, and over July highs back here at 388. And it gapped up on November 14th to open at 383.71, then consolidated in this range here. And then, as I said, kept on going, dipped a little bit here, but then rallied after it dipped down here a little bit below 400. Then it's moved back up here and back to where we are now. So we do know we have price support here at the 20-day, at the 50-day. Now what do we have here? We have a really nice uptrend, higher highs and higher lows. What I want to see here as a technical analyst is I want the price to remain in an orderly uptrend. I don't want it starting to get scattered with candles moving up and down in kind of weird patterns. Notice how orderly this is. Orderly is good. It's good for traders. You get a better grip on what's going on. Yes, it would be good if the Qs could stay above the 20-day moving average, again coming in at 416. Definitely want it to stay above the 50-day moving average, coming in at about 405. And definitely we want it to stay above the January lows at 395. So you can keep those numbers at your elbow. Earnings report will continue to stream in next week. So please stay tuned and consider keeping your protective stops in place. Our final chart today is a daily chart of the Global X Robotics and AI ETF, the BOTZ. We'll call it the BOTS. It has 43 holdings, including the one that's flying today, NVIDIA, Intuitive Surgical, AB Limited, that's ABB Limited, Keyence Corporation, Now, when I captured this chart today, the BOTZ was trading at $29.26, just above its 20-day moving average, above its 50-day, and above its 200-day moving average. Now, you can't see this on the screen, but the bots made an all-time high, just wanted you to know this, at $39.99 in November of 2021. So looking at this chart here, look left with me. The bots made a high in July at $30.36 and then fell in a downtrend like most ETFs did, fell in a downtrend down to its October lows. Fell down here, I think everybody had October lows, at $22.26. Then, like many stocks and ETFs, it jumped in October when it looked like interest rates were starting to fall a little bit, it jumped higher. The bots jumped over the 20-day moving average, gapped over October highs. Right here we had October highs at 25. It gapped up over those, jumped up, rallied up to August resistance, popped over that at 27. Right up here, it moved. Right here I am. Okay, it popped up over August resistance at 26, then kept going and again walked up the 20-day moving average like so many assets have here. It did dip to support at 27 down here in the course of 1 week, then rallied higher again, and again started up the 20-day moving average, again coming into where it is right now at $29.26. Now, what I'm doing here is I'm watching the prior high right here at $30. I'm watching that because I know we're advancing toward that, certainly here at $29.26. So what I'm going to do here is, in the coming week, if the market remains relatively calm and positive, if the BOTZ can stay above the 50-day moving average, and that's coming in at $27.84 right now, if it can stay above this, I am going to add a small, hear the word small, position to my trading portfolio with a stop at 27.50. It'd be just below the 50-day moving average. I won't give it a lot of room. And I'm going to add a small position to my trading portfolio now. If and when it climbs over, this is a little over 30, if and when it climbs over 31, I will add to my position, and of course by then I'll be trailing my stop. So you may want to keep an eye on the BOTZ, the bots, in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our favorite product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade successfully, one of my favorite things to do, Trade the Trend to Profits, another trading strategy I love. If you're a novice, you'll want to look at how to read charts. 3 winning setups are great for short-term traders. And again, my favorite, how to bottom fish like a pro. Go ahead and check out these timeless programs because they're going to show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.